Does a recession cause a market sell-off, or does a market sell-off cause a recession? I say that because, we were just talking about consumer confidence. That is our economy. I mean, you know the numbers better than I do, but 70-something% of the economy is driven by people feeling good about things and buying things. So when they get scared, and typically that scare comes into fear of a stock market doing something that we haven't seen in a while, that's when they slow down. So my question to you is, what drives what in your opinion? I have a view. It doesn't matter what my view is. I'm curious as to yours.
That's like the complexity of the economy, because I'll just give you a simple thing to think about. If we said, if the price of this falls, does it create a recession?
Mhm.
Okay. Bond prices falling, like, probably say no. If gold crashes, we'd probably say no. If like the price of cars crash, we'd say no. But if home prices crash, definitely a recession. If stock prices crash, I'd say it's very likely to cause a recession, right? So, I mean, it's the sources of a market-based recession on price would be from housing or stocks.
Yeah, let's go back to your point about the administration, because there was a note out, I think it was Axios earlier this week, is saying that the Trump 1.0 was very focused on the stock market. Do you remember how many times he would tweet at new all-time highs? He'd be like, "You're welcome, America. Your 401k is doing great." And so a lot of folks thought that that was kind of like a bit of a report card on how they were executing their agenda on the economy. And the report was that Bessent is more focused on the 10-year yield, which to me seems a bit goofy, because Trump's got his fixations, and his fixation is obviously the stock market too. So when you mention that, under the trade tariff situation, that maybe they want the stock market to tumble a little bit. I mean, right now we're down, 3% or so. If you got back towards the gap from November 5th, the S&P, I think it was right below 5,800 or so. That gives you like a 6-7% pullback from the highs. Is that the sort of thing? Do you think that's where the put comes in? If we fill in that whole gap, is there like a psychological sort of number there?
I think that there's a lot of logic to what if Bessent focuses on yield, because we know that you live off what's priced off the yield. So mortgage rates would fall, cost of borrowing would fall. That helps a lot of Americans, but it doesn't mean they want stocks to fall. Right. So I think that people are making that logic leap. I think that the administration doesn't want stocks to go up if there's tough tariff talks, but it doesn't mean that they want the stock market to be down 10% this year, because we know all recession probability models, just exactly what you said, Guy, they go up because the largest predictor of recession is the stock market. So if it's down 20%, then all of a sudden austerity has to go out the window. You have to do entitlements, and the Fed has to unleash liquidity. And that's the exact opposite of what they're trying to accomplish. So I don't think they really want a down market. They just don't want the market to not respect their message right now.
Are there any sectors out there that to you are just flashing opportunity in terms of how they've underperformed? The first thing that comes to mind for me is energy, but there are other names as well. I mean, healthcare has been a bit of a laggard, Eli Lilly. Anything out there sort of sticking out to you where you're about to say, you know what, there's opportunity here?
Not in any particular order, but to me, one of the, I think, sleeper winners from all of this is going to be the financials, because they've underperformed the last 15 years. So they really have not caught a break since the GFC. And finally, an environment that is better for the banks, and AI is actually good for business. And JP Morgan and all these banks show they made money through inverted curves, hyperinflation, tightest Fed ever. And now you have all this reversing. Another group that I think makes sense is digital assets. I do think so. Bitcoin is down, but it's our clients. It's actually not a surprise to our clients, because Mark Newton, our head of technical strategy, really pointed out the cycles in mid-January that he was targeting 62,000 for Bitcoin by the end of March. So we're actually on our way to 62, but that's not a bearish development. It's just a retracement. And the third, of course, is small caps, because once the tariff talks go away, the environment is favorable for American-focused companies, which would be, small companies, and they'll benefit from lower rates, and their multiples are lower. So I think it's